which question just now? Dah lari dah semuanya. Okay. Okay. So let's look into this first. All right. So this one is there are 3 tutorials I think that I gave you. So this is the first one. It's very simple because you are given a few transactions and then you are required to journalize the transaction, post to ledgers, and then at the end, then you prepare a trial balance. All right. So I may have gone into the adjustment without actually going through this tutorial. So it is my fault. All right. I apologize on that. But I hope that, especially for those without the background, I really apologize because I have actually, I overlooked this tutorial. Yeah. So let's look into this example. So what you are required to do is number one is to journalize the transaction. So you have to identify what are the accounts involved and whether the entries are debit or credit. Yeah. And then once you have all these 1, 2, 3, 4, 5 transactions, then we are going to transfer that into a ledgers. All right. When you talk about ledgers, you remember the T accounts. All right. So how are we going to have that T accounts? And at the end of the month, all right, then you prepare a trial balance based on the T accounts. You close the accounts and then you prepare a trial balance. So this one is very simple. So I'm going to show you how. All right, so number one is that Julie opened up a boutique called Blissful Boutique on January 1st, 2021. So this is the beginning of the year. Yeah, you open a shop and then she brought into the business cash amounting to 25,000. So when you have this, all right, so you want to highlight, the color here, all right. So you have a cash of 25,000 and a motor vehicle of 50,000. So when you put anything, all right, into the business, this is what you call your investment into the business. So when you have that, then you have to record what is actually happening. All right, so means that now you put in cash in 25,000 and also a motor vehicle that values 20,000 into the business. So now the company has a cash of 25,000 and a motor vehicle, and this one is represented by what? By the share capital invested by the owner, in this case, who is Julie. All right. So now what you are doing is that you have to record the transaction, even though you have the following transaction, but first you have to record the investment by the owner. All right. So how are you going to record that? All right. Remember that first you have to identify what are the accounts involved. Yeah. What are the accounts involved? So you have to look at this one with cash. So you know that now you have one cash, right? And then you have motor vehicle accounts. So cash and motor vehicle is your asset. All right, and don't forget that you also have the share capital account, right? So your share capital account will also be credited, yeah. So in that case, I dah ada ke belum? Ni yang mana ni? Ini the accounts. Is this the one? I don't think so. Ni exercise 1. Hold on, yeah. I try to open up. Where is it? Where is it? Double entry. Please work for me. Answer, is this the one? No. It's the one. Okay. So this the when you don't have enough of these, which is skip. Okay, all right. So what happened is that you have to record. So I will try to, so that you don't see, right? So first is that you know that what are accounts to be debited and credited, all right? So going back is that you have your, mana dia? Mana dia? The one here. Okay. So again, you have your cash, means that an asset increase in the company, and then you have motor vehicle also increase. So now you have to debit 2 accounts. One is what you call the asset. What is the account? your cash and your motor vehicle. So how much is how much is brought into the business? Then you know that you're going to debit cash of 25,000 and debit your motor vehicle of 50,000 also. All right. But on the credit side, all right, remember that what should be the account on the credit side?
Share capital.
Share capital. All right. So share capital is an account. It should be credited because share capital increase. Share capital is a credit account. So in this case, you have 75,000 credited. All right. So here is you have 25,000 and 50,000 cash, and motor vehicle is your asset increase. So that's why you debit. And share capital you credit of 75,000, which is the total amount of these two. Right? So that's how you put that into your journal entries. Anyone not clear about the first transaction? Okay. You okay? All right. Now we go to the second one. Then the following transactions occurred during the month of January. All right. So what happened now? You have few transactions. Let's look at one. On 2nd of January, so these are the date. Yeah. Purchase inventory. So you look at the item. Purchase inventory worth 4,000 from P Sdn Bhd by cash. So what is actually happening here? What is the business activity that takes place? You purchase inventory. How much? The value is 4,000. And who do you purchase that? You purchase from P Sdn Bhd. P Sdn Bhd here is your, in this case, is your buyer. Yeah, but in this case, because the transaction you purchase inventory, P is not your buyer, it's the seller, because when you purchase, right, you buy from someone else. So P Sdn Bhd is the seller and you buy inventory. All right. So you buy inventory, in this case, you buy by cash. So what happened is that now you know inventory is your asset, right? And you purchase value is 4,000. Then when you purchase, how do you pay for the purchase? You pay by cash. So in this case, you have a reduction or there's a decrease in your cash. So what are the accounts involved here?
Inventory and cash.
Inventory and cash, the value is 4,000. So you know inventory is an asset increase. So you debit in your inventory and credit your cash because why? You pay by cash. So in that case, you're going to record that as a transaction whereby you have inventory, you debit your inventory, and then you credit your cash. Is that clear? Yeah? All right. So then, all right, then you have the other one. On 5th of January, you purchase office equipment by cash. How much? The value is 6,000. So what are the accounts involved here?
Office equipment and cash.
Office equipment and
cash, and the value is 6,000. So when you purchase, it means that you have to pay by cash. So it means that cash will be credited, but what is coming into the business? The office equipment. So with that, you know office equipment is an asset. Cash is also an asset. But office equipment, because you purchase, so there's an increase of office equipment in your business, but cash reduces because you pay your by cash. So because of that, then you have to record in your journal entries. How you record? Debit your accounts. Which account to be debited?
office equipment.
Office equipment is debited and then your cash is credited. Yeah. Okay. Now we have obtained a bank loan, right? So bank loan here is a what is it? Is it an asset, liability, or honest equity?
Liability.
It's a liability. You borrow money from the bank, so it's a liability. So now there's an increase of liability. How much the value is 12,000, and this is to help finance the business. So when you have take loan from the bank, what you get in returns? You have a liability, right, in the form of loan, but what is actually the 12,000 is the cash. You receive cash of 12,000 from the bank, and this is a liability. So the cash will be, you receive cash, debit. All right, you debit your cash and credit your loan. Why loan credited? Because it's a liability. Is that clear? Okay. And then you purchase inventory again that worth 18,000, but in this case you purchase from Salam Wholesaler on credit. What does it mean by that? Who is Salam Wholesaler?
Supplier.
Supplier, all right. And in this case, you have to remember Salam Wholesaler. Why? Because you have not paid them. You have to pay them in the future. So your Salam Wholesaler in this case becomes your accounts payable. You have to pay them in the future. All right, because when you say on credit, it means that you have to pay that later. All right, so again, you have the inventory account, and the value is 18,000, but because you purchase on credit, you're going to open accounts payable under Salam Wholesaler, all right? So what you have here is that you're going to increase your asset in the form of inventory, but now you have accounts payable 18,000. Asset is a debit because increase in asset inventory, but account payable also increases, but in here is credited because the nature is credit. All right, and then you paid Salam. When you pay, it means that it involves your how much? You pay 10,000. You pay to Salam, who is the accounts payable just now. But what you pay is not 18,000. You only pay 10,000. So when you make payment, it involves your cash, isn't it? So cash reduces, and the other account, you have cash. You pay out by cash. Pay to whom?
Salam Wholesaler, account payable.
Salam
Account
Wholesaler.
payable. So you are going to have that account, but now accounts payable is debited. Why? Because when you pay, all right, the accounts payable initially it was 18,000, now you pay 10,000. So it means that accounts payable reduces. All right, bila accounts payable reduce, then it means that it has to be debited. Right? Remember, accounts payable is a liability, increase credit, reduce debit. Right? So now your accounts payable, initially it was 18,000, now it reduced by 10,000. Your cash has to be paid out, so you credit your cash 10,000. So now you have done the first part, which is journalize the entry. So you have 1, 2, 3, 4, 5, 6 plus the investment. So you have 7 items there. That's how you record, journalize your transaction. Is that clear? Which part that you are not clear, let me know now. Before we go into post to ledgers. Okay, no question? Anything that you are not clear? Right. So now we are going to do the second one, post to ledgers. All right. So when you talk about ledgers, it means that is a T account. So what is a T account? It looks like a T here. See, there the T in tu, right? So now what you have to do is that you have to open up. I will just close this first. All right, not close. I will just so that you don't see the accounts yet, right? So that you learn how to do the closing, the transfer, and then. So when you have to do ledgers, all right, I suggest that whenever you have you have to do journal accounts first, right? So let's see, all right. So look at your transaction, journal entries here. Then wherever you have under the journal entries, you're going to post that into a T ledgers, all right? So look at these are the name of the accounts, right? So these are the names of the accounts that you're going to open a ledger, right? The T account. So for example, when you have cash transaction here, so you open a cash account. So what you do is that, all right, for those who have no background, all right, can you see my screen now? Bukan screen, I nak tengok. Do you see my whiteboard?
No.
No?
No, madam.
Hold on, yeah. Stops presenting. Okay. Okay. But it's blur. I do not know why my camera is blur. When my student told me that my my screen are blur. So can you actually see now? It's blur, is it?
Yes.
How? Can you pin me?
Oh, maybe.
Try to pin me so that I can see. Oh, kenapa blur? My jari here.
Maybe because you using the focus.
How do I remove the
You can
focus?
choose it at the background.
Background. Okay, hold on.
Turn off the
So I remove. Don't use background at all. Is it?
yes. Yes.
Wow, it's like that. Oh my god. So all this while is blur too. Okay. So for those who have no background, right? So when you want to do T accounts, you just have T accounts. One, that's a T. Okay. So that's your T account. And then, right, if you have a cash, now you put a cash now. So you know that this one is your debit side, and then this here is your credit side. Is my whiteboard is a mirror image or not?
No.
No.
Okay. All right. So you have the debit side and the credit side. So look at the journal entries. So look at what other accounts involved. For example, the first one you have cash. How much is the cash? So cash, and then you have another account which is the motor vehicle, right? So in your exam, you may not have to write the full, right? The full sentence, right? So you have the motor vehicle, and the other one is your share capital. So you can just put it like that, right? So you have 3 accounts here, 3 accounts, because this is based on your journal entries. So you must know your debit side and your credit side. So what happened is that just now we say that you debit your cash of 25,000, isn't it? And then you debit your motor vehicle 50,000, and you're going to share capital. What you can do is that you can write cash of 25.
75.
Sorry?
75,000?
Is it? I don't know. What was the amount? All right, no. Okay, cash of 25, and then you have the motor vehicle of 50. I know that in your journal entries, you put it as share capital 75. But that 75 actually comes from, can you see this? All right, cash of 25, motor vehicle of 50. Because you want to list down what kind of capital that you have. All right, means that you know that, okay, now the owner has put in cash of 25,000 and motor vehicle of 50,000. Right, how do you know this? It's come actually from this account, cash and motor vehicle. So all these 3 accounts, it comes from your journal entries. Is that clear?
Yes, madam.
All right, that's good. So from then, once you have that, all right, so this is what we call your T accounts. Okay, now I'm going to share again my Excel. Where is my Excel? Okay, here. So you have your account. So whenever you have cash, all right, then you means that these are the 3 accounts that you have to open up. All right, so means that now you have the first entry is your cash that you put in as 25,000. The other one is your motor vehicle, is 5,000, and then you have a share capital in this case, right? You break up that share capital into your cash of 25,000 and motor vehicle of 50,000. So far, so good? Okay. Then you go for the second transaction. You have inventory and cash. You debit your inventory account and cash 4,000. So do you have your inventory account yet? No. So you open up your inventory account. Let's clear so that we can learn how to actually do that later. Okay. I will just do this. Okay. So when you don't see any account yet, so means that you have to open up the account. Yeah, open up the T account. So when you say that you debit your inventory 4,000 means that now you're going to open up an account called inventory, right? And then you're going to debit that account. So how you debit your account? You just debit lah, right? So you put debit cash on 2nd of January, right? Cash of 4,000. So that is your debit inventory. What about your credit? Credit your cash of 4,000. So you remember that you already have a cash account here, so you do not have to open another cash account. Use the same cash account. You don't have cash 1, cash 2, cash, unless later when you do a bank account, so you may have bank 1, bank 2, bank 3. So that one you have to open separately. But for cash, normally you only have one account, cash. So whenever you have, in this case, you have a credit cash, then you're going to credit that account. So you're going to put that credit for 4,000. Similarly, if you look at the description here for the inventory account, you have 4,000, and what are the accounts involved? Cash. So you know that based on inventory, you know that the double entry is inventory and cash account. So if you look at here, you see cash is paid for inventory purpose. Yeah. Next, we have the office equipment. Similarly, we don't have any office equipment yet, so you open up office equipment. So office equipment, are you going to debit or credit?
Debit.
Debit, because it's an asset increase. So because you already, at this point, you don't have to actually justify, because you have to decide debit or credit when you do the journal entries. All right. So when you do the T account, you just transfer, or what we call, you post the journal entries into your T account. So that's why we call posting to ledger. So you just post, all right? So office equipment debit and then cash credit. So you have that office equipment 6,000, and again credit of cash because you purchase your office equipment. That's why you have 6,000 credit on your cash account, right? Then you have your cash again, bank loan. So you debit your cash, credit your bank loan. So again, where is your cash? You debit your cash account here. Where's your bank loan? Do you have any bank loan here? So here, remember bank loan, that is a credit, it's a liability. That's why you're going to credit your cash of 12,000. No, credit your bank loan and you write that as cash, right, of 12,000. So you know that from the looking at the T accounts, you should know what are the double entries involved, right? And finally, then you have your inventory. Is anyone coming in? I have to accept. Saida. Right, and then you have an inventory on accounts payable of 18,000. So where is your inventory? Inventory you bought for another inventory of 18,000, but now you create your accounts payable. Where's your accounts payable? Here. Yeah, you can have your accounts payable, then you have your inventory of 18,000, right? And the final one is that you have debit your accounts payable and credit your cash. So accounts payable, you are going to debit your accounts payable, and then you're going to credit your cash. Where's your cash? Look into your cash. Then you write down cash. What you pay for your accounts payable of 10,000. All right. So now with all these 1, 2, 3, 4, 5, 6 journal entries, you already have recorded all that in your T account, right? So that is what we call post to ledgers. So you have done this posting to ledgers. Right, you have post to ledgers. So what you have to do now is that close the accounts and prepare a trial balance. All right, so how are you going to close the accounts? So I'm going to show you how you need to close the accounts. So what do you mean by close the accounts? It means that you're going to decide how much is the balance of the accounts at the end of the period. So in this case, it says that the question asks for end of the month. So it means that you're going to close at the end of January. All right, so let's look at the cash account. So cash account, all right, you have a debit entry. All right, and also you have a credit entry. So, but you must know that at the end of the month, you want to know how much is my balance, right? How much is the balance that I have at the end of the month? So how I want to know how much the balance that I have? Remember that for each account, you should know what is the debit or credit, whether it's an asset liability, yeah? So cash, you know, is an asset. So asset will have a debit balance, yeah? Liability has a credit balance. Honest equity will also have a credit balance. So remember the nature of the account. So if it's a cash balance, then you should know what is the total on the debit side, right? Cash is a debit balance. So you take what is the total on the debit side. So what you do is that you take the total here. So total is 37,000, right? Similarly, on the other side, remember that the accounts must be balanced. So the other side must also be 37,000. But how do you know what is actually at the balance? It means that the cash account should have a 37,000, but you have also made payment for your inventory, office equipment, and accounts payable. So what happens is that what you do is that you have to see that these are what is the total of your credit balance, all right? What is the payment made? So you know that the total amount here is 20,000. Right? So if it's a 20,000, it means that 37,000 minus 20,000 means that the balance here must be 17,000. So the balance here is what we call the closing balance. All right? So how do you know the closing balance? Look at the debit side, means that if an asset, all right, total up the debit side and minus all the credit. In this case, these are the entries, yeah? So you minus 37,000 minus total here, which is 20,000, then you have a balance carried down. So balance carried down. So you bring the balance to the following month. So this 17,000 will be balanced at the beginning of February, right? So this 17,000 will be opening balance for your February. Right, they don't have it. So here should be 1 of February. Okay, so that's how you see, that's how you decide how much is the closing balance. Is that clear? Anyone not clear about the closing balance? Don't, all right, now you're first year, right? So remember that the amount that you have at the end of the month is balance carried down, or sometimes we call it balance carried forward. And beginning of the month, you have balance you brought down. You brought from the previous month, or you brought from the previous period. So brought down or brought forward, yeah? Okay, so 17,000 here. But when we have the motor vehicle, right, where you want to decide, of course, again, you know, motor vehicle is an asset. It means that it has to be you have your credit balance, debit balance. But in this case, your debit balance on the credit side is also 50,000, but there's nothing here, right? So there's nothing here. So it means that how you decide on your closing balance? Huh? So because 0 here means that whatever you have will be carried down. So this is your closing balance. Yeah, so if there is nothing, then you don't have to, means that 50,000 minus 0, because here is 0. So it means that you don't have to do anything, right? You don't have to deduct. So the whole amount is now being brought down to the following month, right? So you have balance brought down of 50,000. Right, similarly for capital, but remember capital is a credit balance, so you total up the credit side, right? So total up the credit side, total is 75,000, right? So means that the balance has to be 75,000. So how you decide closing balance? Because here is 0, you don't have to deduct anything, so means that the whole amount 75,000 will be carried down. Right, means that now the opening will be brought down from the previous period. So you have a brought down here. In this case, this should be 1st of February 16. Yeah, but is it 16? I thought that it's supposed to be 2021, right? So it's not, right? So it should be 2021, right? All right, just ignore that. right? So all this should be 21. Yeah? Is that clear? So that's how you decide on the closing balance. Okay, so you have the closing balance. So accounts payable, debit or credit balance?
Credit.
Credit.
Credit balance. So you look at the credit side, what is the total on the credit side, right? So you have that 18,000. So this side, it must also be 18,000. But on the debit side, you have 10,000, right? So if you have a debit side 10,000, what do you think is your closing balance here? Right, your
8,000.
closing is 8,000. Why? Because you have 18,000. No, I don't want that color. I want the, right? So 18,000 minus 10,000, you have closing of 8,000. So this closing will be the opening for your following period, right? So opening balance, the following is on credit side because accounts payable is a liability. So you have opening balance of 8,000. This one is what we call opening balance, and this one is what we call closing balance. Closing at the end of the period, opening of the beginning period. Opening balance for the new period. Okay, so you do all that. All right, for office equipment, I think that you don't have to do anything. So what, looking at this, what will be your closing balance for your office equipment? You don't have anything on the other side. Yeah, so you have a 6,000, right? Bank loan, similarly, right? You don't have anything here, so it means that you're going to have a
12,000.
12,000. And bank loan is a liability, that's why you have a credit balance here. Okay, it's a credit balance. So once you have all the accounts prepared, all right, all the accounts has been closed down. Now what you have to do? The next requirement is for you, you have closed the account, now you have to prepare a trial balance. So what is a trial balance? Trial balance is an account listing all the accounts with the balances. That's what I mean, trial balance. All right, so you list down all your accounts. How many accounts that you have here? Cash, motor vehicle, capital, accounts payable, inventory, office equipment, and bank loan. So you're going to prepare a trial balance. So where is my trial balance? I don't see my trial balance. Oh my God, what is my trial balance? Okay, I don't have any trial balance here. So let's do this. Let's prepare a trial balance. Okay, trial balance as at this one is 31st of January 2021. Right, so you have that. So what you do is that you have to have the list of accounts here. All right, and then you're going to have that whether is it a debit balance or is it a credit balance? All right, debit or credit balance depending whether is it asset liability or honest equity lah. All right, okay, let's do the first. So now cash, you have cash account, so you write down the cash account. All right, so cash, and then what's the balance? Is it debit balance or credit balance?
Debit.
Debit.
Debit balance. So how you know? Because cash is an asset, so cash should have a debit balance. And you see here, you have the balance on the debit side. You cannot say that okay, cash you have a credit side here because this one is for you to decide what is the balance. But this 70,000 is the extra money you have at the end of the month, so it's a debit balance. So look at here, balance here is a 17,000. So debit, then you write down 17,000. Okay, the next one is your account. You have, I think that motor vehicle. So you write down motor vehicle. Okay, what's the balance?
50,000.
The debit balance of 50,000. Okay, then you have share capital. Share capital, what's the balance? Debit or credit balance?
Credit.
Credit balance, so you have 75,000. So you list down, that's one, I'm going to list of accounts, right? And then you have accounts payable, debit or credit?
Credit.
Credit, how much is it? It's 8,000. Then you have inventory. How much is your inventory? Let's look at your inventory. What's your inventory? So, oh, we don't have it here. Why? I forgot. What's your balance? Balance is you have 22,000, no credit entry, so you have balance of 22,000. Inventory, you have debit 22,000, right? And then you have what else?
Office equipment.
And bank loan. Office equipment, you have bank loan. Office equipment, how much is it?
6,000.
6,000. And then bank loan is a credit of 12,000. Yeah. Anything that we have missed? None.
No, no,
Right. So what happened is that the trial balance should have, now you have a balance accounts, list of accounts with the balances. All right. So if you want to see whether your accounts is right or wrong, one way looking at it is looking at the total debit and total credit of the account. So total debit on this side is 50,000. And the credit side must also be total of the credit side, right? So you have many again. Okay, credit side here is 95,000. Why is it not the same? Where are we missing? When you see this, then you look at, oh, the difference is 95 minus 50,000. 95 minus, so you look at the difference of 45,000. Where could it be? Capital, accounts payable, motor vehicle 50,000. Oh, here see, I put motor vehicle as 5,000. It should be
50,000.
So that's why I have a difference of 45,000. So that's why you need to do the trial balance. Now you see the balance, both sides, debit and credit are the same now. So that's how you do your trial balance. Okay. So if you look into later when you do, remember just last class we did the adjustment, you are given the trial balance. But the trial balance normally is prepared, all right, normally we have arranged it accordingly. So you know that there's a debit side, all the asset, and then you have all the liabilities, and then you have the owner's equity account. So it's easy for you to decide whether it's an asset or not, yeah? So this is what the requirement, right? You have to do the journal entries. And now number 2 is that you post 2 ledgers. Right, and then this is what we call post to ledgers, and now we have prepared trial balance. Okay, you prepare your trial balance. So these are the 3 steps that you have to do, all right, when you have this kind of question. I think that in your quiz, all right, we are going to go further where you have to prepare your financial statement, right? So looking at the trial balance here, right, so if you were to prepare profit and loss account, if financial statement, all right, you have profit and loss account, you have retained earnings, and then you have your SOFP, all right, financial position. But here, all right, looking at this, you know that this is your cash, all right, I put it, this one is your cash. Let's put it into blue color. Share capital is your owner's equity, right, owner's equity, let's put. Accounts payable is your liability, let's put it in red. All right, and then inventory again is a blue color, right? So you identify, all right, and then office equipment, but bank loan is again is your liability, right? So looking at this, looking at the trial balance, you should be able to prepare your SOFP, right? If you look at your SOFP, quickly, right? Let's do this. Command C, Command V. Right, this is SOFP, statement of your financial position. So your asset is your cash, motor vehicle, then you take all this inventory and your office equipment. Command C, all right, it should be here. Command V, and then here is your liabilities. In case you have accounts payable. Command C, just plug in that amount. And then you have bank loan. Command C. And then you have the third one is your owner's equity. In this case, how much is your honest equity? You only have one share capital here. You want to see? Right. So what is the rules? Is that your total asset will always be equal to your total liabilities plus your total. I put it here, easy, right? So you look at your total asset is your total here, take that amount, and then your total liability here first. Right, then you have your this one total honest equity and liability is your 75 plus your 20,000. Right, so you have this one and you have asset also of 95,000. Okay, so that's how you prepare based on your trial balance, prepare your SOP. So the first requirement, journalize the entries, post to ledgers, and then close the accounts. Post to ledgers and close the account. Don't forget to close the account. Right, and then post to trial balance. Right, this one is the additional, it's not required because I just want to show you how from the trial balance you post to your SOP. You don't have profit and loss because there's no buying and selling, there's no income and expenses, right? So you only have SOP here. Okay, are you clear? Question? So you have this question number 1, and then you have question number 2, right? Then you have question number 3. So in this case, you already given, right, let's look at question, generalize the above transaction. So it means the requirement is still the same. Generalize the transaction, post to take accounts, balance of the account, and then prepare trial balance. So this one is similar to question number 1 where you have, in this case, sold 50,000, purchased furniture, prepare tax return. So remember that you have to understand the company is a tax consultancy firm. So it provides consultancy, tax consultancy, yeah? So that's why we say that, okay, perform tax return on clients. So this one is your revenue, yeah? So prepare tax return is a services provided. So now you earn your revenue, right? And then in this case, perform tax service is another revenue, right? But in this case, you receive cash of 13,000. When it means that you're going to receive that later in the future. Okay. So, and then what else? You have supplies of by cash, and then it means that you are going to open up account supplies and cash. You bill your client for tax. So it means that now it means that what do you mean by bill a client? What are the accounts involved? Journal entries? What do you mean by bill a client?
Account receivable.
Yeah, I mean that you have performed services and now you bill your client. So you're going to open accounts receivable. The other one?
Sales revenue.
Sales revenue, yeah? Or you can call revenue account only, yeah? And then you paid salary and rental. So this one is your expense. So what will be the entries here? Journal entries for here. Paid salary and rental. Right? So this one is one account. This one is another account. So what are the entries? Journal entries for 20th? Debit your salary. And then debit salary, how much? 8,300. Right? Rental is 1,800. So you have to look at what is the value there and post it accordingly. Yeah. And salary 8,003 debit, rental 1,008 debit. Why debit? Because it's an expense. Expense always has a debit balance. Why? Because related to owner's equity. When you spend, means that you reduce your owner's equity. When you generate revenue, you increase your owner's equity. Yeah. And of course, when you make payment, so when you say paid, it means that it has to be cash. Receive payment, so when you receive payment means that you receive cash lah. From client for service performed on January 8. So client January 8, how much you receive? 16,200. So you have to go back to the accounts here, then you have to record. Right, so it means that when you receive payment, so you're going to debit your cash and credit your accounts receivable. Remember, when you have here, you have your accounts receivable, your client. Yeah. And then paid for furniture. So you have furniture account, all right, and but you purchase that on account on 3rd. So now you have to pay 42,000. So that is your cash. And the bank, you borrow 200,000. So it means that you receive cash, but you have a liability from Mass Bank, which is your accounts. You just put a bank loan, yeah, Mass Bank loan. Okay, so you journalize the accounts, post to 3 accounts, and then close the accounts, prepare to trial balance. Yeah, so this is similar to what we have done before. Okay, and here, what happened here is that you have Allen Studio provide high quality music mastering and mixing service to producers. Right, so you have to understand the business. So the adjusted accounts every month, here are the adjusted balances. So means that, right, so this one is balanced as at 31st December. So what do you call this balance? Opening balance or closing balance? 31st December 2020, and then you are given during January 2021. So is these balances 31st December 2020 opening or closing?
It's a closing.
Opening.
It's a closing balance. Yeah, it's a closing balance. So so means that it's opening, it's a closing balance for December, but it's an opening balance for January 2021. So when you are given this information, all right, you have to put these balances into the respective account. It means that you have to start, right, later you are required to do A, B, and C. A, B, and C. Right? A is that you journalize and then post to the accounts and prepare a trial balance. So first you do the journal entry. So means that remember that this one, when you do your T accounts, you have to put this as your opening balance.
3 o'clock.
Yeah, balance brought down or balance brought forward. So you have these as your opening balance. And then when you do the T accounts, whatever your journal entries from this transaction, post into the T accounts, and then only you close the accounts, then you prepare your trial balance. Yeah. Okay, so they give you a hint here, the balances will be the opening balance for January 1st, 2021. So that's what you mean. So when you are given the balance here, then you have to put in the accounts, right? So what's time now is 3 o'clock. Can you do this? Boleh tak?
Boleh.
Yes.
Can, huh?
Yes.
All right, if you have problem, you let me know. Right, so because it's already 3 o'clock, I want to go into the preparation of the financial statement. Is that okay? Right, this one, you try to do this first. If you have any issues or you have problem, you let me know. Right, just write into the, you can write in the group, right? If I don't answer, maybe your other friends can help you with the problem. Okay?
But madam,
Yes. Yes.
we haven't received this question yet.
Huh?
I think this is the different
Lanjutnya apa?
question from the one you give in WhatsApp.
No, I give it in the Google Classroom.
Oh, Google Class. Okay.
Okay, hold on. I double check ya. Classwork. This one is topic.
Ada, madam.
Ada eh?
Ada.
Topic 3
Ada.
is it? Topic 3 or topic 2? Ni, kenapa tak ada?
3. 3.
Kenapa tak ada? 3. Where is it ah? Why is it not there?
Yang itu coursework, madam.
Habis tu yang nak buat apa ni? Classwork, topic 3. Ni. Tak ada pun. What is it I thought I put it here. But you can access.
Can.
Can you? Oh,
Yes.
Yes.
So how am I supposed to
Stream. On stream.
stream? Oh, okay. Sorry. Stream? Macam tu Right? So it should be which one? Tutorial recording. Tutorial recording. No.
Exercise 1. Exercise 1.
One. Is it?
Yes.
Okay lah. Alright. So it's already in your Google Classroom, ya? Okay. Ya ke? Macam bukan ke yang?
Tutorial, madam.
Dia pula. Tutorial. Where?
Yang tutorial recording.
Kenapa ada recording tu? Oh, recording of transaction. Okay, this one, ya. Go into your tutorial recording of transaction. So there are 3 questions here. Okay, please do all. Right, if you can do this, right, challenge yourself, you can do this, and then if you happen to get your trial balance, most likely you'll get, most likely you got it right. Right, most likely. Okay, if you got it wrong, first it could be a typo error, like I did just now, or maybe the transaction or the closing figure is wrongly computed, or you may have wrongly have your transfer your journal entries into your T accounts. Okay, so now I want you to look into your exercise 1. Mana exercise 1? Is it this one? Mana? I think exercise 1 tadi. Banyak sangat ni. Exercise 1. Okay, let's do exercise 1. Is it exercise 1? My PDF problem tu lah. Aku tak nak buka Come on. Directly lah. Open. Tak ada kan? How to open that? Let's see Google Chrome. Exercise 1. Can I open it from there? Oh, sini boleh. Open with Acrobat. Nak kena sign in pula. What is this? Oh my God. Oh my God. What lah? So how? Oh, this lah. Cukup lah ni Kita tengok ni je. Okay. So this is the exercise 1 where you are required, alright, generalize the transaction and then prepare post to T accounts and then prepare trial balance and then prepare the statement of profit and loss and changes in equity, and then you have your financial position. So this is the additional where you have to prepare financial statements. Are you ready? Okay, let's do this. On July 1st, 2020, Jazeera formed a company, Jazeera Co, providing cleaning services. 12 months later, on August 1st, 2021, the statement of financial position showed the following balances. So it means that if I use this, I cannot underline. I can't do anything. Right, so you have cash of 4,000, account receivable of 2,500, supplies 500, office equipment 5,000, accounts payable 4,002, share capital 6,005, and retained earnings of 1,300. All right, and then you have the few transactions. So now what you have to do is you have to generalize the above transaction. Okay, so what you do now, do the journal transaction. Let me see, where is my, this is the one. Okay, this is the one. So now we are going to do the journal entries and then post to your T accounts and close the accounts, prepare your trial balance, then financial statements. Okay, look at number 1. Collected 2,000 of accounts receivable due from customers. So you collect cash from your accounts receivable. So how you journal entries? What are the accounts?
Debit.
Cash.
Debit which account? What are the accounts?
Debit cash.
Debit cash.
Cash.
Account receivable.
Yes, you receive cash 2,000 from who? From accounts receivable. So you're going to debit your cash and then you credit your accounts receivable. Why? Because account receivable now pays you, so it means that the amount due from the account receivable now reduce, right? So what you do is that you identify the accounts first, right? Your cash and your accounts receivable. You can see that clearly. All right, and how much is 12,000 ringgit. All right, so you identify which one is the debit, which one is the credit. Is that clear? All right. Now we have paid. You paid 2,700 cash for accounts payable due. So now you make payment to whom? To your accounts payable. So cash, credit or debit?
Credit.
Credit.
Credit your cash, debit your accounts payable. Why? Because now accounts payable reduces, so that's why it's debited. Right? So how much is the value? 2,700. So what you do is that you identify the accounts and how much is the, so you have debit accounts payable and credit your cash. All right? So for journal entries, you always list down the accounts which is debited first, then only the account which is to be credited. So it should be like that, right? You don't put credit and debit. You always start with the debit accounts, what is debited and what is credited. All right, so in this case, your accounts payable is debited and your cash is credited. The next one is that you earn 6,400, of which 3,000 is collected in cash and the balance on account. So what do you mean by earned revenue? All right, so means now you have a revenue of 6,400. But from the earned revenue, you only receive cash 3,000 and the balance you will receive in the future. So you know that you have revenue accounts, debit or credit?
Debit.
Debit. So you're going to, basically, revenue is debit or credit?
Credit.
Credit.
Revenue, debit or credit?
Credit.
Always remember revenue is always a credit, expenses is always debit. Right? So you have your revenue 6,400. So how are you going to record that? You have a revenue credit of 6,400. But from that 6,400, you receive cash 3,000 and the balance on account. So cash, you know that you're going to debit your cash 3,000, but what is the other accounts that you are going to create?
Accounts receivable.
Receivable or payable?
Receivable.
Receivable, because you're going to receive that money from your client, right? So you know that you have your, I would say here is your, the accounts, how much is the, what is the account? Cash and account receivable. How much is your cash received? 3,000. So if you receive 3,000, how much is the account receivable?
3,400.
How do you decide 3,400?
6,400 minus 3,000.
Yeah. So it's the balancing figure. Hold on, yeah. No, plus. Right? So it's the balance. So 6,000 minus 6,004 minus 3,000. So you have account receivable of 3,400. So that's how you do it. All right. So I think that they also have this description here. No, they don't. Right. No. Okay. Right. So that's how you decide on the amount of your receivable here. All right. Is the balance. Yeah. The balance of 3,000. Right. 6,004 minus 3,000. Number 4, we have what? Paid salaries 1,005, rentals 900, and advertising expenses 3,350. So how many accounts you have here?
3 account.
3 expenses and 1. How do you pay?
Cash.
Cash. So are the
Cash.
4 accounts actually. Yeah. So you're going to have salaries, rental, and advertising. Debit or credit?
Debit.
Always. Expenses are always debited. Right? And credit your cash. So how are you going to record that? So you have your, how many accounts? So these are your expenses, so your salaries, rental, and advertisement. You put in the amount individually, all right, 1,005, 900, and 350. And of course, the cash is the total of this. How much is the total of this? It's 2,750. So you put 2,750. How do you compute that? You just look at the 3 accounts. Total is 2,750. Is that clear?
Madam,
Yes.
Madam, how could paid salaries and rent is debit?
Why? Because remember expenses, these are expenses. So expenses reduce your owner's equity. Right? So owner's equity, what is the nature? Credit or debit?
Debit.
Right? Owner's equity is on the right side. Debit or credit?
Credit.
Credit. Right? Remember your asset is debit, liabilities, and owner's equity is always credit side.
Credit side. Yeah.
So when you make payment for your expenses, so that expense reduce your owner's equity. So when you reduce your owner's equity, debit or credit?
It's debit.
Debit. But if it's a revenue, revenue increase owner's equity. So revenue account should be debit or credit?
Debit.
Again, revenue increase owner's equity. Debit or credit?
Yes. Increase. That means it's credit.
It's credit. So you must always remember revenue is always a credit and expenses is always a debit. Why? Because expenses reduce owner's equity, revenue increase owner's equity.
Okay. Okay. Thank you, madam.
Right? All right.
Yeah.
Okay, now you have the dividend. You declare and you pay dividend of 550. So what happens is that dividend is taken out from your retained earning, right? Later, you see that. All right, so when you declare, so you can have a dividend that you only declare, but you pay later. So in that case, you are going to have a dividend payable. But if you declare and you pay a cash dividend, that means that you're going to debit your dividend account, credit your cash account, right? So what are when you make payment for your dividend, so you debit your dividend account and credit your cash account. Okay, my question is, why is it dividend is debited?
Because it was expense.
Dividend is not an expense because dividend does not appear in your profit and loss statement. It appears in your retained earnings, statement of your retained earnings. Of owner's equity, right? So remember your owner's equity, you have the share capital, then you have your revenue, you have expenses, and you have dividends. So these are the 4 items which normally in your statement of retained earnings. Okay? So dividend, when you pay out dividend, does that increase owner's equity or decrease owner's equity?
Decrease. Decrease.
It decreases your owner's equity. So when your owner's equity decreases, is it debit or credit?
Debit.
Debit.
So that's why dividend account is always debited. Why? Because dividend reduce owner's equity. Because when you want to make payment, right, that payment reduces your owner's equity, right? So that's why it's debited. And cash, of course, because you make payment, of course, you have to credit your cash. Okay, right. Now we have your receive 2,000 from MOI bank, the money borrowed on a 4-month note payable. So in this case, it clearly mentioned is note payable. So when it's mentioned note payable, then you have to open note payable. So what will be the account involved? Receive
Credit.
2,000 from the bank, note payable. Debit your this 2,000. What is that you receive?
Cash.
Cash. So debit your cash. Credit your.
Not payable.
Not payable.
So you debit your cash, credit your note payable. So that's how you do debit your cash and credit your notes payable. Notes payable is similar to accounts payable. The difference is that because note payable, you will have a contract. It's always a contract that you stated clearly, or it's for 4 months, and normally it carries some interest. Yeah. Okay. Number 7 is that you incurred utility expense for the month on account. What does it mean by incurred utility on account? Will be paid in September. Right? So you know that it's going to be utility expense, but do you pay cash?
No.
No, you're going to pay that later. All right. So when you pay that later, and in this case, normally if you have payable here, you're going to have utility payable, right? So the accounts involved here, all right, I suggest that you open up utility expense and utility payable. The amount is 300 each. Yeah. So if you look at here, so you do not need to do this, but in this case, because they already have it here, right, they just debit the credit net 16,700 on both sides. So it's not required, but it's okay, means that you know that, oh, your debit side and credit side is the same. All right. So next, what you have to do, post to T accounts. Right? T accounts, how are you going to do that? So remember that before you post your journal entries, you are given the opening balance. So all this opening balance, you have to open up the accounts respectively, right? And then you put in that amount as a balance, opening balance, all right? For example, you have a cash of 4,000, so you have balance brought down 4,000 in your cash account, right? So for example, here you have your description here, the first one. So when you have all these balance brought down, you just open up all of these account mentioned. You open your cash, account receivable, supplies, office equipment, accounts payable, share capital, and retained earnings. So you start with these accounts and then put in all the opening balances, right? So if, for example, you have a cash and then you have a accounts receivable, right? I believe that you have this here, right? Account receivable, then you have office equipment balance, isn't it? Office equipment, do we have? Yeah, we have office equipment of 1,000 opening balance. All this information first. You don't have salaries. What you have? No utility, revenue, share capital. I think that you have a share capital opening balance, yeah, of 6,500. And you have a accounts payable. You have a balance here, credit balance, yeah. So when you have all these balances, you have to be very clear that what is actually to be debited. Oh, sorry. What is to be debited and what is to be credited. All right. The balance depends on the nature of the accounts. Cash, we have a balance, a debit balance. Account receivable is an asset. That's why it's a debit balance. Office equipment, debit. Supplies is also a debit. It's an asset. But when it comes to your account share capital, it's a credit balance. Yeah, because why? Because it's a credit accounts. Yeah, and the accounts payable similarly is a liability. Okay, so once you put in all the balances, right, and then now you post all this transaction into your T account. For example, you have a cash of 2,000 debit, so you debit your cash 2,000 here, and then you have credit your accounts receivable. So where's your account receivable? Here is your account receivable. Then you have a credit of 2,000. So you put in credit of 2,000. Right, so that's the first one. The second one, you have accounts payable, debit 2,007, cash 2,700. So cash is another 2,700. And then where's your accounts payable? Accounts payable is somewhere here. So you're going to debit your accounts payable 2,700. So you just follow your journal entries and plug in the information into the T accounts. Cash, here we have cash of 3,004, account receivable cash 3,000, account receivable 3,004, and revenue of 6,004. So you're going to debit your cash 3,000. Right, where's your account receivable? Debit another 3,400, and then where's your revenue? So you don't have a revenue account, so you're going to open up your revenue account. So how much is your revenue account? So you're going to put cash of 3,000 and account receivable of 3,400. So you have to list down the accounts accordingly, so that you know that, okay, you receive revenue in the form of cash, and you have account receivable of 3,400 in the form of revenue. Okay, and then what else you do? You have your salaries, rental, and advertisement. So you pay up for all these 2,700. So in your cash, right, I believe that you have to have the three items, right? Salary, rental, and advertisement. But these account expenses, you're going to open up your salary account. Is it salary? Salary, where is your salary? Notes payable, utility. So salary, you have a debit here, salary. Don't forget what else? Salary, rental. Do you have a rental here? Can you see rental? Share capital, utility, rental. I don't see rental. Here it's here. Yeah, rental account. So in your when you do your question, right, you have one set for your T accounts and all that, right? So if you can put your asset, liability, expenses into similar area, right? So asset one area, liability one area, expenses one area. So when you do your trial balance, right, you know already where to put the balances. Right, and then we have dividend, right? Then you open up your dividend account, debit your dividend, credit your cash. So here you pay out for your dividend, right? And then you open up a dividend account. Where's your dividend account? Right, it's a debit. And then cash 2,000, notes payable 2,000. You receive cash from your note payable, the borrow money from the bank, and then you open your note payable. Where's your note payable? Note payable. You don't have the note payable, you have to open up the note payable, but I don't see note payable now. Oh, here it's here. Yeah, note payable 2,000. Okay. What else you have? Finally, I think that then you have your utility and utility payable. So utility, you have utility payable here. It's a credit because it's a liability. Where is your utility account? It's here. Yeah. So if you don't have the account, then you open up the new account. Yeah, you open a T account. So that covers transfer or posting your transaction into your T accounts or to your ledgers. Now you have to close the accounts. So I show you one, for example, for your cash, you look at the debit side, what is the total cash? All right, okay. Okay, and then on the right side must always be the same amount. So how you decide? You look at what is the balance. Where is the balance? Okay. Right. So you have a balance of 5,000. How do you get that 5,000? Look at your 11,000 and the total on this entry is 6,000. So 11,000 minus 6,000 is how you get a balance of 5,000. And this balance appears as your opening balance in the following month. Look at that. Right? So you know that, okay, these are the closing balance. So even though the closing balance is on the right side, but remember that this balance is a debit balance, right? Because this one is going to be a balance, opening balance for the following month. Similarly, you will do for your all other accounts, all right? Accounts receivable, look into what is your closing figure, all right? In this case, you have 3,900, but 2,000 on the debit side. 2,000 on the debit, and this one is credit side, so balance is 3,900. It means that initially you have a 5,900 accounts receivable, but at the end of the month you receive 2,000, so that's why your balance is only 3,900. All right, it means that you still are going to receive 3,900 from your accounts receivable. Right, so do all the accounts, closing of all the accounts, then you have all this up. Okay. Supplies, there's no transaction for supplies, so it means that you're going to close the account supplies here as it is, salaries also as it is lah. So if you don't have any balance as a shortcut in your exam, if there is no debit and credit amount, you know that it's going to be, these are going to be the closing figure. Similarly for supplies, there's no other account, no other transaction, this is going to be your closing figure. Yeah. Rental and expenses, also these are going to be your closing figure. This is going to be closing figure. Debit or credit? Debit. Yeah, because it's an expense account. Not payable, there's only one account, so it means that they're going to know that they're going to have a balance here. Utility payable. Utility payable. You have balance here? You don't have any balance, yeah? Utility 300. Okay, so you close all the accounts accordingly, right? So for example, you receive dividend, there's no other. So this will be your closing figure. Utility will be closing figure. Revenue, in this case, it's different. Revenue is you have 3,004. Not sure. Let's see. Right, what will be your closing figure? It's the same. You don't have a debit side of the revenue, unlikely. Your this one will be your, similarly, this one will be your closing figure. Share capital, no changes. Accounts payable, initially you have brought down 4,002, but then you cash 2,007, so means that the balance will be different. Yeah, balance will be the balance of 1,500, because why? You have made payment of 2,007 to your account payable. Okay, not payable will be 2,000, you need 50. So once you have all the accounts closed, then you go to the next step where you prepare your trial balance. Is the question asked for trial balance? Prepare a trial balance. So once you have all the accounts, then you put it into trial balance. List down all debit and credit side. So you have all these accounts, all right, in cash until your retained earnings. So where's your retained earnings?
Madam,
Yes.
sorry, but I have another class.
Oh yeah, I'm sorry, it's already 3:30, my God. All right, for those who have class, all right, or if you have anything, you can leave, but I will continue because I will continue to record this session. You can refer to the recording session later, all right, so that I can finish all this. Anyone
Okay.
who don't have,
Thank you, madam.
if you cannot stay, it's also okay also. You can just leave the class, yeah? Because I want to finish this recording so that you can refer to the exercises later.
Okay, thank you, madam.
All right. Don't continue me because now I'm going to do the recording. All right. Have a good break, yeah, before next class. Oh, next class is a public holiday, yeah? Deepavali. Yes. So please do all the tutorial and then watch my videos so that you can help yourself. Okay, all right. I will continue with the trial balance. So based on the account that you have closed just now, you are going to transfer all the balances into your trial balance. All right, make sure that you do it correctly, the debit side and the credit side. Right, and then once you transferred everything, you total up your debit side and credit side, it should be the same figure. If it's not the same, then you check what are the amount, what are the differences, all right, and then you try to guess what could be the reason for the differences. All right, look at the amount and where it could be wrong. It could be a typo error, it could be wrongly transacted. Yeah. Okay. Based on this, all right, based on your trial balance, all right, you prepare first is your comprehensive income, which is your profit and loss account, right? And then you prepare your statement of changes in equity, and then only your financial position. So before you do that, all right, identify your accounts. All right, you have the first few here is your asset. All right, so I'm going to put your asset like that. Salary is your expense here. I put it as a salary expense. That is clearer to you. Utility is also an expense, so we put a different color. Revenue is part of your profit and loss account. Share capital is your honest equity. So I don't want this only one that. Oh, okay, I put it as your. Okay. Accounts payable, note payable, utility payable is your liability, right? And then you have your dividend and retained earnings is part of your honest equity, right? Honest equity is purple color. Okay. So once you have identified the accounts, whether is it an asset, liability, honest equity, revenue or expenses, then you can decide where it goes into. All right. For example, you're going to profit and statement of comprehensive income. All right. So this one is your profit and loss item. So you have these salaries and your revenue. So you plug in your revenue account is 6,400, and then all these expenses you put into your statement of comprehensive income. So you will have it here, right? Your salary, your revenue, and then all the expenses. From there, identify whether is it a profit or loss. All right. So once now you have a revenue of 6,004, utility total expenses is 3,450. Then you have a profit of 3,350. Next, prepare statement of changes in equity. If you look at the question, it also asks in that manner. Statement of profit and loss. From there, prepare your statement of changes in equity, right? So you prepare your statement of changes in equity, or sometimes we call it statement of retained earnings, right? This one sometimes we call it as a retained earnings, right? So you have a balance brought down, right? How much is your balance brought down? In this case, is that you have a balance of 1,300. So where do you get the balance from, right? It's clearly mentioned that your statement retained earnings here is you have a 1,300 balance. Yeah, so here. So you have a balance of 1,000, right? 1,300, and then you have a profit. So whatever profit that you have it here, right? This one is transferred to your statement of retained earnings or changes in your equity. And you also have a dividend. Remember, you pay about dividend here, right? So dividend, so this one is the opening balance, right? Retained earning and your dividend. So it goes into here. So now you have retained earning closing is 4,100. So this is the amount that goes into your statement of financial position. So when you do your statement of financial position, which is the last one, right? Prepare statement of financial position. So you'll have identified from your trial balance asset all this. So you just plug in the figure. Okay, you plug in the figure. You have 5,000, 3,009, 5,500. And then your accounts payable, so you have the 1,005. So plug in the figure. 1,005, 2,000, and 300. Okay, plug in the figure. Okay, and then share capital is the initial share capital. How much you have? 6,005. So all this information is actually from your trial balance. 6,005, and then your retained earnings, except for retained earning, you have to take the adjusted retained earnings here. It's 4,100, so it's there. Okay, from here, then you compute how much is the total. You have asset of 14,000, liability of 3,008, honest equity 10,006. So you total up these two, or liability and honest equity, you should get 14,400, which is the same as your asset. So for that, you have done your the requirement, generalized entries, post to 3, accounts, prepare trial balance, profit and loss account, changes in equity, and prepare the financial position. All right. So I want you to do this question again and again, and then look for other, because I think that we have another tutorial in your Google Classroom that have a lot more question on this, right? For example, if I were to show you, not this one. Where is it? I think that I cannot open. Where's the Google Chrome? Right. So if you look into presentation of financial position here, that they give you a trial balance, and from there you prepare the profit and loss account, all right, statement of changes in equity, and statement of financial position. So these, you do all these a lot, yeah. So you do it quickly and get it correct the first time. If you're wrong, do it again and again and again. Yeah, so you should be able to, based on your trial balance, prepare all the financial statements. Yeah, so just like I did just now, where we have this information, right, and then we prepare, where is it? Is it here? No, not that one. Oh, it's here. Yeah, so based on the trial balance, prepare your statements. So I think that, I hope that you can do the question now. All right, please do it a lot. Please do a lot of exercises here, especially for those without the basic, for those who are not clear about this transaction. All right, do a lot of exercises, because if you can do this well, inshallah, your financial accounting basic is strong, right? Then you can move forward to a more difficult topics. Yeah, more challenging topics. But for you to do that, you must, this is the basic of accounting. For those who is the first day of class today, right, you may have to refer to the previous slide, or maybe this class today, right, you should be able to identify which accounts is to be debited and credited. Yeah. So I think that's all for today. I hope that you have learned something from the class, and I'll see you again, inshallah, next time. Oh, there are so many more here in the class. Why is it upside down? I want to stop recording. Do you see the mirror picture or what?
Yes, madam.
Okay. Just now, is it okay or not when I presented?
Okay.
Okay, all
Okay,
right.
madam.
All right, so you will have about 25 of you are still here. Thank you for still being here. So don't forget your attendance, all right? And please do all the tutorial that I've given you. All right, I hope that by doing all this tutorial, and you can get a lot more questions, all right, on the online, all right, so that you can do a lot of exercises. All right, accounting is all about exercising. It drills you, right? You have to do a lot of exercises. All right. If you just attend the class and then yes, you can get, all right, you can absorb the knowledge, but if you do not practice, you do not write it yourself, right, you don't belong to accounting, right? So accounting is always busy with doing all these questions, right? I hope you enjoyed the class today. I'll see you again, inshallah, next class. With that, I thank you, and Assalamualaikum warahmatullahi wabarakatuh.
Thank you, madam.
Thank you, madam.
Thank you, madam.